Good morning, Janice.
Good morning. How are you?
I'm well. Today, let's talk about 7 tax tip to avoid trouble with the IRS.
Yes. Tax time.
Yeah, this is timely content. Would you agree?
Absolutely. Absolutely.
I mean, I don't think anyone wants trouble with the IRS. Would you agree with that?
Personally, no, I definitely don't. They're not. They're definitely not a group I would want to challenge.
Yeah.
Yeah. We're going to do everything right when it comes to tax time.
We'll get into this a little later, but I think as a general philosophy, the less contact in general you have with the IRS, the better. It's kind of like just stay off their radar, yeah?
Yeah, absolutely.
Yeah.
Absolutely.
Cool. So let's jump in. Number 1, the first tax tip to avoid trouble with the IRS, just assume it's income. If you have any doubt, assume that it needs to be included as income on your tax return, yeah?
Right. When in doubt, assume.
Yeah. Some maybe non-intuitive examples include if you won even a couple of bucks in the lottery. Well, maybe not a couple of bucks, but if you won a small amount in the lottery, gambling winnings.
Yeah.
Right. If you go to Atlantic City or Vegas or what have you, and you got lucky, you didn't get all the way lucky because you got lucky up to here, and then you owe the IRS this much.
Yeah.
And the casinos will send you a 1099, so the IRS knows that you won. Yeah.
Yeah. So it's pretty clear. It's like you have money that came in, and you better report it.
And another example is contest prizes. So if you go on The Price is Right or whatever's popular these days, and you win a new car, that's awesome, right? Oh, cool! I have a new. I don't know. I don't have a car, so I don't know much. The Toyota, right?
Right.
So if the value of the Toyota is $30,000, so you have a new car, nice. But guess what? You owe the IRS, because you just kind of earned $30,000. So whatever your tax rate is, you're going to owe that on the car. Hooray!
That could throw you into another tax bracket if you're right on that cusp. You win a car, boom, higher taxes. So
doesn't feel like much of a prize.
That's much. Originally, when you're all excited and jumping up and down, and it would be pretty cool to win a car. I mean, I have to be honest. But you're right. Once you sat down with the tax attorney and they say, yeah, start paying.
Cool.
That might hurt a little.
All right. So the second tax tip to avoid trouble with the IRS, don't miss any 1099s. So in case anyone doesn't know, the 1099s are the forms you get from anyone who's not your employer for reporting income that you received. So think like your bank sending you a 1099 saying you earned this much interest last year, or your brokerage account saying your stocks owned this many dividend or this much in dividends last year, and so forth. And there's a lot of different variants on that. If you're a freelancer, you'll get a lot of 1099. You would know this, Janice, yeah.
Yeah.
So because this is reported from both sides, meaning the bank, when it sends you a 1099, it also sends a copy to the IRS. Mm-hmm. That means the IRS knows that this income is coming to you, or should be.
Right. And, on the flip side of that, if you don't get a 1099 when you know you should have gotten one, you still report it anyway, whether it's still income, whether they forgot to give you your 1099 or what have you, that money still has to go on your tax return.
So we do this a lot with our estates, Janice, where for whatever reason, we just don't get our 1099, but we know that we earned income that year. And you just have to keep following up. Otherwise, you're going to end up having to do an amended return, and we talk about later why that's not a great idea sometimes. So just it stinks if they didn't get it out to you the way they're supposed to, but it's better for you to follow up and get it done.
If you know about it, exactly like you said. If you know about it and it's income, and put it down.
All right. Tax tip number 3. Don't ignore the IRS. I mean, this one kind of feels a little bit like common sense, right?
Yeah, but if you don't have the money to pay it, and you're thinking, if I just don't answer the calls, and I mean, they don't go away.
Yeah, they don't give up.
They're going to stop calling you, and
this isn't the furniture store down the street that might just. Well, even they won't give up. Nobody gives up. They want their money.
No, especially it's the IRS. They're gonna call. They're gonna, it says. Talk to them, send them a letter in writing. On the flip side of that, I found this interesting even back in my years at the police department. You get a lot of people that call around this time and say, I'm from the IRS, you owe a ton of money, you need to pay me right now in Google gift cards or Bitcoin or no, I'm serious. And people will go to the store and they'll get these gift cards and then they'll call this IRS number and give them, we've seen upwards of $10,000, $15,000 of people buying gift cards to give to the IRS.
Oh no.
It doesn't work that way.
You mean the IRS, yeah?
The IRS, yeah. The IRS is never going to call you and ask you for gift cards or Bitcoin or whatever else they could give you. They just want, cash, and they're going to do it the right way. So you have to be mindful of that this time of year.
Yeah, I think within the past 5 years, the fake IRS scam has really sort of taken off. Is that about the right time frame?
Absolutely, yeah. But it's always been there. It's just now getting worse because it's easier to get a hold of everybody. Yeah.
All right, so just make sure it's an official correspondence. If you have any doubt, just go to a CPA, H&R Block, anywhere. Just get some confirmation before you cut a gift card, like you said.
You never will have to pay anyone of the government or local government with a gift card. And, a lot of people, they just don't know when someone's calling you saying, you're going to be arrested right now. Okay,
It's funny that you mentioned Bitcoin because, total tangent, but the moment an official government accepts Bitcoin as payment for taxes, as a revenue source, the price of Bitcoin is going to go through the roof.
Interesting.
I mean, that's a theory. This is not investment advice. Do not listen to me on Bitcoin advice.
Do not go invest your entire savings in Bitcoin. Right, but they just want money. They want cash.
Yeah.
And, you're going to get to that point. It says don't fight the small bills, just pay them. So you get, I inevitably get that $12. You forgot $12 of some sort of interest or something. That goes out that same day. I'm not going to argue with you for $12 ever.
We do this sort of cost benefit analysis with our estates so much, where there's even up to like $50 or even $100 on pay it. You don't want to pay your lawyer who charges $300, $400, $500 an hour to dispute something that would cost way less just to pay and get rid of. Correct. Right.
Right.
And disputing it, not only do you pay your lawyer, but you might invite more scrutiny from the IRS.
Right. Now you're going to be audited. Now you're going to have more money. Just pay the $50, $100 and just, okay.
Yep.
Fine.
Right. Cool. So the next tax tip to avoid trouble with the IRS, keep your records. All right. So you don't have to keep them forever.
No.
Well, your tax returns, if you can, and because it's so inexpensive now, you just PDF them and throw them in your email or something. Just keep your tax returns forever. But the supporting documents, like your 1099s, W-2s, whatever else you needed to complete your tax returns, the Excel spreadsheets that you made, you can probably get rid of those after 7 years because the statute of limitations is 6 years from the date you filed. Right.
Okay.
So you're in pretty safe ground if you wait 7 years. So for anyone listening to this now, you can get rid of any supporting documentation from 2012 or before. Yeah.
Yeah. Yeah. But I keep everything in a binder at the end of the year. Put it in an envelope, and I just kind of stack them up. It doesn't take up too much room. Like you said, you can PDF them, but just in case, I'm one of those. Just in case, I'd say, all right, in 2013, we went to receipt from, I'm going to have it.
Well, you live in a more rural area. Your house is probably pretty big. I live in an apartment in Manhattan. I'm not storing 20 years of documents.
Right. The door behind me, that's actually a walk-in closet where I have everything, just paperwork, just files and, all kinds of. So I do have the space because different environment. But yeah, I can imagine you'd want to get rid of everything. Look, we hit the beer. Get it out of here.
If I kept everything, those boxes would have to double as my kid's bed or something.
Your kids sleep here. You'll be fine.
All right. So number 5, the 5th tip for avoiding trouble with the IRS. Be cautious with amending your returns. So if anyone who doesn't know, that means that let's say you filed your 1040 by April 15th like a good little soldier, but you realize, oh no, I forgot something, or when maybe one of your banks sent you a 1099 late, and from the tip that we gave before that you have to add that. So now you have to amend your return, and in this case it's called 1040X. They make it sound really cool, like X-Men, but it's not cool.
No.
And you're basically saying, hey, I made a mistake, or there was an error, and here's the correct numbers. Now, if the IRS gets something from you that says I made a mistake, how do you think they're going to react to that?
And how much did you mistake the whole first time?
Yep.
When you said, your whole document originally that you sent, how many other mistakes did you make?
So that means that you're tagged as that guy or that lady who makes mistakes on their tax returns. Maybe we should take a look at this person.
Yeah, let's see. How many other mistakes did they make that could benefit us?
Right, exactly. So, I mean, try not to do this. If you have any doubt, if you have all your information, get on extension instead of filing and then amending. Right? You can extend your tax due date from April 15th to I believe it's October 15th.
It's October, yeah.
And as long as you pay the tax or what you think the tax is, there's no penalty. You get one free extension of 6 months. So, there's no real drawback.
Time.
Yeah.
Right. I still have things trickle. What is it? March 5th is what today is. But I still have things that are trickling in from some of the banks. So if I would have gone and filed early, I'm still getting things in the mail. So, you're right. You kind of have to play that out if you need the extension or wait till you're a little closer.
So if there's a mistake that's actually in your favor, let's say you forgot a deduction or a credit, and you could gain $100, $200 by amending your return, you got to do a cost benefit analysis to see if it's worth it. I mean, is it worth getting that extra? Let's say even $200-$300, right? I mean, everyone's life situation is different, but let's say I can get $200 or $300 by amending my tax return, but that would also invite the IRS to take a look at my past 3 to 6 years tax returns.
Not that you did anything wrong with them, but they really look very closely.
Yeah.
You could have missed something or,
So it's up to you. Like, at what dollar amount is it worth the risk of inviting additional scrutiny? You just got to make that call. But just be aware that it is a balancing decision you need to make.
Yeah. It's like, kind of have to think about that one.
All right, the sixth tax tip to avoid problems with the IRS: file on time. We just talked about this, even if you can't pay. So there's two kinds of penalties with tax returns: failure to pay and failure to file. So let's say your taxes are due April 15th, like everyone else, and you owe, I don't know, $2,000. I'm just picking a number out of thin air. If you don't have the $2,000, I mean, a lot of people don't have $2,000, and hopefully you get refunds, everyone. But as long as you file, you can at least ask, "Hey, can I get a break or a payment plan?" Or you can work with the IRS. But if you fail to file, you're doubling up on your penalties.
Yeah, right. So, like you said, at least that opens a door where you could call and say, "Listen, I don't have $2,000, but could we put on a payment plan? I can pay X amount." They're definitely more willing to do that than, "Oh, I didn't file and I owe money, and now can you help me?" Yeah, not so much.
Yeah, I mean, they actually have pretty, I wouldn't say lenient, but they have a whole infrastructure for payment plans and forgiveness and waiving penalties. You just gotta ask, and you gotta ask. You're more likely to get those programs if you ask on a timely basis, right?
Correct.
Otherwise, you're just some guy who decided not to pay that. You're Wesley Snipes or whoever.
Oops. Yeah, I know, right? Oops. I mean, they don't really look fondly on, "Oops, I didn't file."
Or because there's a whole subsection of the country that believes income tax is unconstitutional and sort of willfully don't pay and say you are, don't tread on me, that kind of stuff. I mean, I'm sorry, I'm not making fun of anyone. Everyone has their own worldview. But the IRS, you don't want to be lumped in with that from the IRS point of view, right?
No, because they don't look so kindly on that. No.
Yeah, sure. All right, last one, tax tip. They don't like big refunds, which I think that's logical, right?
Correct. It's a business. They don't want to hand it back.
There's there's two ways of looking at it, because obviously, yes, like you said, the IRS is not in the business of giving money back.
No, that's not.
They're a revenue collection agency, right?
Correct. Right.
But also, it's unusual. I mean, there are very few circumstances where you should be getting a huge refund, and it generally implies a mistake somewhere along the line, meaning you overdid your withholding if you're an employee, or you overpaid your estimated taxes, which means, who would do that? Like, you are somebody who makes bad decisions, right?
It's yeah, exactly. See, earlier what we were saying of now you're going to say, well, what else did you mess up if you're,
bingo,
you can't figure that out.
Yeah.
But they don't it's just kind of a red flag, right?
Yep.
When they're like, well, why do I have to give them such an enormous amount back?
Yep.
What are we missing?
Yep. Or what mistakes has this person made in the past, and what other mistakes have they made? So, so if you do have a refund that's substantial, you can sort of smooth it over or make it less conspicuous by not asking for a check or a direct deposit, and instead applying it to your next quarterly payment or your next year's return. That's not ideal. I mean, obviously, cash in hand is king, but
sure,
it can offset the red flagginess of the situation.
Correct. The red flagginess. I like that. All
right.
And another thing to throw in there, I always throw. don't fib. I know it sounds so funny, and it's like, even the smallest amount of, let's see, did I really give $100? Maybe it was $300. Like, it doesn't work that way. You have to have documentation for everything you do. I mean, you see it all the time. They're like, oh, well, I probably spent $500. Well, did you? Or did you not? Because when the IRS wants to see all your documents, 100, 500, that's pretty big.
Yeah.
I mean, that's just one like silly example, but you do see it all the time.
Yeah. Just be precise. Don't stand out for the wrong reasons in the IRS eyes, right?
Right. Absolutely.
Yeah. All right. I think that's all we have today. I mean, I think this is a useful topic. Taxes are coming up. Yeah.
Yeah. Important time of year.
All right. Well, thanks, Janice. Thanks again as always, and I guess we'll talk again soon.
We'll chat soon.
Bye now.